everyone who's interested in silver, stick around for David. And I'm going to unmute you, David. There you go. Should be able to hear you.
All right, Dale, thank you.
You're back.
Do you see my screen, or do I have to do something to show my screen?
Yeah, there's a green box, David, says share.
Got it.
And
okay, you cannot start screen share while other participant is sharing. Okay.
Oh, okay. Maybe because Greg is sharing.
Yep.
Can someone let me see if I could do it. There you go.
Okay. Share.
I know this is early for you, huh, David?
It is. And how long do we go? 30 minutes?
It's I'm the captain here. Whatever you need to do, okay?
Okay, I've got to leave at 7.
So yeah, we won't go that long.
No.
So silver will be 80. Silver could be $80 by then. So we.
So I said I'm showing screen 1, and I just hit
start. Here it comes.
You've seen a long chart.
We got it. Yeah, we have the copper chart there.
All right.
So David, welcome back. Perhaps I've kind of been around the markets for a long time, like you, and maybe you could just tell some of the people that are coming into it that weren't around for the Hunt silver squeeze a little bit about your background.
Okay, well, I'm long-winded at times. I'll try to keep it succinct, but I was 11 years old when Lyndon Johnson took silver out of the currency. So we went from 90% silver coins to what I call Johnson slugs. And none of the adults seemed to pay much attention to that, but I noted it. It seemed like, the two can't be equal in value. So fast forward years ahead, I became kind of obsessed about money and started studying on my own. And once I discovered how the banking system worked, then I realized that we could be in trouble in the future. But I didn't, again, obsess about it, didn't think a lot about it. My main career when I was in school was actually a pilot. I worked for a couple of large aircraft companies, one actually on the black side in the skunk works, but that's a side story. So I was fascinated by the markets. From the time I was 16, I was allowed to trade. I got the Uniform Gift of Miners Act. And so that's been my passion from basically the day I was born till now. Left the aircraft industry pretty early on and focused primarily on investing and trading. I'm a position trader. I'm not a day trader, not too much of a swing trader, but I've always had the adage, like the great late Richard Russell, that markets know more than anyone. And whether or not the price got there by manipulation or breaking news or whatever really doesn't matter that much in the aggregate, because the price is the price. And we can only agree on that. We can argue about why or how or any of that. It doesn't really matter. When there's more selling than buying, prices go down. And when you're selling silver or selling soybeans, the commodity never asks the question, why are you selling me? I mean, that's as simple as I can make it.
Yeah, it's people voting with their wallet, David.
Exactly. And that's what we get to see in the chart. So I also apply fundamentals, which I know there's pure technicians. I know there's pure fundamentalists. And I know there's arguments on both sides. I mean, there's the pure technicians will say that fundamentals are fundamentals. You're kidding yourself like you know more because you know the fundamentals of a given asset, a given commodity, or even a stock. And then, of course, the pure fundamentalists say, well, those are just a bunch of squiggly lines, and you don't know exactly until you look behind you. And there's some merit in that as well. So I know from 40 years of experience and being obsessed about markets and market movement and money in general, both are useful. So I approached two ways. So the reason I started with copper, when I caught the end of the previous presentation, someone in the audience that hopefully stuck around for me asked about copper. Copper is called Dr. Copper, and it's a good indicator. And I don't think now it's as good as oil, but still I think it's valid. And the reason it's Dr. Copper is it's a pretty accurate indicator of long-term economic health on a global basis. Well, what is
that? Back at the beginning of the year when we were trading over $3, I think Dr. Copper got hit with a malpractice suit for impersonating a bull market.
Well, you can see it on the chart here. Yeah, that's a good one. You're right. I mean, it's
Anyway, I don't know if they settled or not, but
yeah.
so what are you seeing here, David? I mean, it
Well,
almost looks like we could come out of here to the upside.
it's
Now,
possible, but my overall thesis is
it's
this:
bearish.
until we break through the 330 level, which is
Okay.
the top of the chart and a double top there.
Yeah.
And can you see my cursor when I move it?
Yeah.
Okay, so we got a top there and a double top there. And
Okay.
so double tops are more powerful to the downside than a single top. So we've got this, double top here, and then we fell, we rallied up. We did go above it. So that would, and I'm not a big Elliott guy, but it looks like, oh, we might have made it. As you said, we got above $3 and false breakout is what I call it. The
Yeah.
point I'm making is this: I think and believe and stress that the overall economic health of the world is contracting, not expanding. And the only way you could ever pay off this debt in the United States and all these other major countries, pick a European country of your choice, it doesn't matter. Take the Eurozone, any that are on the Euro, it doesn't matter. No one is producing enough real growth to be able to pay off what they owe, which means there's going to be a default of some type. You either default by saying, hey, I can't pay my bills, or you take 50 cents on the dollar and we can settle it out. Or in the government's case, in almost all cases where you're not on a gold standard, you just print and print and print until the money becomes worth less, and then it's finally worthless, which is what the South American countries experience all the time.
Yeah,
Now,
Argentina again
yeah,
last week. Let me ask you this,
sure.
David. You've been around the block a few times like me. Do you read into the selection of Christine Lagarde to head up the ECB as exactly what you were talking about? She has experience with restructuring debt through the IMF with countries that have had debt crises, and maybe that's another reason why she's going to be heading up the ECB.
Exactly. No, I concur completely. I think that we are going to have a reset, whether it's by design or the financial mother nature. It's going to happen. And I
Okay.
also believe it's going to happen probably within the next 5 years. I don't think you can push the paper paradigm much further than we already have.
Do you think we'll go to negative rates here to keep it going?
I do not. I
Okay.
think the dollar will be the bastion of last resort, and everyone's going to flood into the dollar, and gold will be going up concurrent with the dollar. And a lot of my ilk, a lot of my peers and compadres will be saying, what the hell's going on? Gold's going up like crazy, but so's the dollar. And the
Well, all they
reason
have to
is,
do is look at the last 6 months,
yeah,
right? I
exactly.
mean, it's been happening. So, what in fact, isn't that gold thriving in a potentially deflationary environment like it did in the 30s?
Exactly. And on top of that, it's a liquidity squeeze that John Exter was so eloquent about teaching us, that when you stop trusting the derivatives, you stop trusting corporate bonds are all junk, for the most part. You stop trusting even the T-bond. They're not going to pay me back real money in 30 years or 10 years, even a 10-year note. I don't want to risk my money for that. And when that happens and you run to the most liquid thing possible, and for 98.7% of the planet, that means currency in their hand.
Yeah.
And when you're in Argentina, you want a US dollar. You don't want the Bolivar. You want to have a dollar. And so there'll
Yeah.
be a huge rush there. The problem is when that rush happens, there'll be a point in my studied view when you say, I don't want this either. This is losing value. It sure did better than the Bolivar, and I'm glad I moved into it, but now it's not really protecting me. I need to get some gold.
Okay.
I think that's
Uh,
what happened.
I'd like your reaction also, which is kind of a new event that's really never happened in this way. You talk about liquidity squeeze. What is your belief that's behind what's happening in the overnight market, the repo market, where banks have to pay up almost double for overnight funds when the narrative previously to this was US banks are fine. We did the hard work and we cleaned up our balance sheets and our financial system compared to Europe. Why is there stress in the repo market and the overnight Fed funds market?
This is conjecture because I don't know for a fact.
Everyone, yeah, I know.
Yeah, I'm
Uh,
just making sure.
Educated
I'm
conjecture. I'm interested.
well, I'm very well trusted, and people trust me. And they ask me some of these questions about subjects I know nothing about. But
Well, I mean, how many people have a silver dollar named after them? Kennedy and
yeah,
you.
yeah, exactly. Well, thank you. So
The Morgan silver dollar.
there we go.
That must have been a big day in your life, was it,
Oh
buddy?
man. Oh
Okay.
yeah. So
So what's going on
I
there?
really do. Yeah.
It's not the corporations are squeezed for tax payments and they're
No,
scrambling for
that's
funds.
that's a red herring, of course.
Okay.
No, there's some very large insolvencies in the banking system. And since
Okay.
these banks are inextricably connected to each other, it's a domino effect. And if you look at these domino games where one domino hits the next, and a long chain fall down. In the banking system, everything is so leveraged. It's really an exponential function. So it's one domino hits two, hits four, hits eight,
Yeah.
hits 16. If one goes, it's not going to go two more go. It's going to go like they all go, more or less. I'm using that as a metaphor, but that's very much more accurate. So there is some huge insolvency out there. And this is where we were in 2008 in a different way. What happened in 2008 is the banks didn't trust each other and the banking system actually seized up. There was no real currency trading between banks because they just didn't trust each other. The Fed, good or bad, came in immediately. And if had they paused or thought it over or elected a committee to decide or any of that stuff, we probably would have had a much worse situation than what we had, because what took place was the Fed immediately came in and said, those bad mortgages that are really pieces of crap, well, give us those and we'll give you these T-bills. And they did that to all the banks. And therefore, everybody trusts the T-bill that's, the best out there. So they've replaced garbage with coveted, well-respected money, quote unquote, and kept the system going. This time what's happening is the banks don't trust each other. They're not sure even overnight if they're going to get their money back. This is huge. Most people don't understand it, which means they've got to go to the Fed, which they trust. So this is the walk of shame. Banks don't go to the Fed unless they have to, because it shows that they probably have a solvency problem and don't have enough money on. First of all, to be in the repo market and have to borrow means you don't have the reserve requirement that night. You have to have it by law. So that means you've got to go borrow overnight. Happens all the time. It's happened for years. There's a whole market called the repo market, and it's just the course of doing business. And there's lots of reasons, and not tax payments. Okay. But if a bank says, I need to borrow, and the bank A says, I need to borrow, bank B says, no, I'm not going to loan to you, not even overnight. Bank C says, no, D, E, F, G. Then they go, oh, we got to meet the reserve requirements, go to the Fed, which is allowed to go to the discount window and borrow overnight. That's a bank, but that's not what's happening. What's happening is it's lots of banks, and it's a lot of banks that won't loan to other banks. So there's a huge something going on. I mean, there could be a derivative fault in the background that we don't know about, that somebody out there in the big finance has defaulted. And so that means that bank is persona non grata. Well, as I just said, and I want to clarify, you could go and say Bank A it failed, and the banks are keeping it quiet, or it's not trusted. For what fails, maybe too strong words. So Bank A isn't trusted. So then what happens is these other banks look at, well, what is the biggest partner of Bank A? If it's Bank of America, as an example, I'm not saying it is, then who's got the biggest book with them? Oh, it's Wells Fargo. Well, I'm not going to do with Wells Fargo because they've done, 60% of their stuff with Bank of America. And then you go to Wells Fargo. Well, who do they do the most with? Well, they do it most with, I don't know, the Bank of France or Centaur Bank or whatever. And see, this is how it goes. So it's sort of like the social credit rating in China. If you're a no good Nick and you are ostracized and your credit score goes down, your social credit score goes down, you don't want to associate with that person because your social credit score will go down. So I hope I did a good explanation.
That was really, and I learned, okay, I didn't know it was law. So what a great explanation. So let's now get to, we've talked about things in the background. let's get to silver, David.
Yeah,
And
let's get there. So one more quick comment on copper.
okay.
So what I'm saying, and have said for some time, for everybody out there that looks toward the fundamentals, is copper is saying to me that the next move up in finance is going to be precious metals only. Now I'm lying because I think the ags are going to soar because there's a food shortage coming. But what I'm saying is there is not going to be another resurrection of the commodities boom that we saw in the early 2000s because of China. That's not happening. What's going to happen is you're going to get the real needs, which are going to be food, water,
fuel.
Even shelter is going to come down. Housing prices are still overextended in a lot of areas. So copper is saying to
overextended. They're at new highs here on the
yeah,
coast. They took out the '08 highs.
It's crazy. I mean, I live in a very conservative area, and we don't get that kind of movement in the housing market here. So I'm I'm aware of it, but I didn't know that. So thanks for educating me.
Anyway, if we take out 250, you're talking about, and I remember copper. I've been around long enough. Copper trading under $1. So okay. And one other thing before I forget, we had a nice move from, I don't know, about 92, 93 in the gold silver ratio. Do you think that was the peak?
No.
And no,
I think I'm not a huge Elliott guy, but I believe in the overall theory of it.
Yeah.
And so there's a 5-wave. So there's 3 waves up and 2 correction waves.
Yeah.
So as far as I can tell, we've had our 2 waves up, and we're finishing the 4th wave, the correction wave, and we've broken out of that at 1350 gold that I'm showing here on this chart.
Yeah.
And we are ready to go up. And the 3rd wave up is usually
the money wave,
the big one. So whatever the 2nd wave did, which I think is from here to here in gold, so you go from 700 to 1950. So I'm going to call it 700 to 1700. I'm going to excuse 1,000 because I do the math in my head really quickly.
Okay.
So the next wave is usually double or triple that wave. So instead of $1,000 move, you're going to get a $2,000 or a $3,000 move. This is a rule of thumb. I'm not
from 1050
from this point. So you're going to go from 1350 up 3,000 more, which is 43.
That's how people get 4,500, $5,000.
Yeah.
Okay.
So had 11-year bull market. This 2008 crisis on this scale looks like a big correction, and it was. But you could see time-wise, it didn't last long. It was like, oh my God, things are going to hell. Oh, Fed comes in, rescues the mission, give you good paper for bad. Things go on. We come right back up, and then we make a new high.
Would closes back under 1350 change your view?
It would.
Okay.
Because
it's always good when
this is a 6-year top. 6 years I had to wait for this.
Right.
And I trade more than gold, and I do equities and all that, and I'm not trying to make
it. To your credit, David, I remember I talked to you a couple of years ago, and you said, nah, Dale, there's nothing to say for a few years. 2018, 2019, things will start to heat up again. And you were correct. We went into a dormancy period in precious metals, and you said, just in a couple years, things will start happening again. And that was, a great gut analysis that you knew there wasn't going to be much to talk about for a year or so. I remember our conversation.
Oh, yeah. No, it's true. I do get.
But then when you contacted me and you were ready to come on, and I had some time lag where I could book it, I go, okay,
yeah,
this is real. David wants to get out there, and he's putting out the word again. So
I appreciate it. Yeah, you've got a great audience, and everyone learns from each other. There's no such thing.
And a memory. How about that? I can't remember what I did yesterday, but I remember you saying nothing's going to happen in the metals for a few years. Yeah. Anyway.
Well, I've taken so many courses on how to trade, and I'm still learning things. But I have to tell a joke to everybody because I know it's almost all traders. But when I was in Silicon Valley, which was many years ago, in fact, I was born in San Francisco. That's just an aside. So I've been in the Bay Area a lot. I was connected with this trader that was a day trader, and we became fast friends. We met at an options conference, and we ended up having lunch together, came fairly close for a period of time. And he was British, and he was Cambridge school type, so I can't do a proper Cambridge accent, but he had this joke, and I have to tell it because I thought it was the funniest thing going. So I'll tell the story. So he says, David, do you know why we have so many indicators? You know, the Welder Index, the Bollinger Bands, and it goes on and on and on. And I said, well, yeah, I know. We do it for getting an edge on the market, to get an edge on trading, to be better, to do better, to make more money. Oh, no. We do all those things so we can impress the girls at the bar.
Yeah. Well, now you could get, huh?
Yeah, keep laughing because there's a point to this. So
right.
I did all that stuff. And I am down to the absolute basics of basics, and my trading is stellar. Is it perfect? No one's is, but mine is extremely good. And here's why. I threw out about 98.7% of that stuff. Yeah. I look at price and volume. So when you said, David, is this breakout? Now, your previous guest, I don't want to put words in his mouth because I didn't get to talk to him. As you said, would 1350 change your mind? The answer is yes, it would. Here's why I don't think that's going to happen. First of all, it took 6 years to break out. Secondly, look at the volume. This is the key. If you move on a weak volume, stand back and reappraise or don't enter. When in doubt, stay out. Oh, what did you say, David? When in doubt, stay out. Do I know every time I enter a trade that it's going to work out? No, I don't. But if I have any doubt, I'll stay out. I won't do it. And I have the Morgan 3-day rule, which means I have a certain point where I see whatever I'm trading, it has to break out above it or below it. If it breaks above it, I wait 3 days. Well, David, you missed $27 in the gold market. Yeah, but if I'm a position trader, I'm looking for that gold market to go up 3,000 then I'm not going to worry about losing $25, believe me. Same thing
that's
here.
one of the most difficult things to do for traders.
It is hard to do. Yeah, go ahead.
Reach. But what's even harder? People could say, oh, David, great forecast on silver, great call on it, great trade. But the toughest part is a great hold.
Yes. Well, let's go to silver. Do you have your audience ask questions or not?
Yeah, they want to see your silver chart.
Okay, let's do that.
Forex Gal wants to. Okay. And Monica said dollars don't want to live in Argentina.
Oh, U.S. dollars.
Yeah.
Okay, well, that's good to know. I certainly can learn more. There have been times in the past where they do, but okay, so here's silver. Pretty messy, as you can see. Silver did bottom in 2015. You can't see it this chart, but it really touched the bottom. Excuse me, there you can see it, right? So that's the bottom.
Right there. 13 and a half or so. Yeah.
And it almost hit that bottom again. Gold didn't do that. Gold kept making higher highs and higher highs. And so
that's why that gold silver ratio got up to 90.
Yeah.
I mean, I remember 40 being the mean for gold silver ratio.
Yeah, right. So, I'll talk this chart, of course. 2016, we went from that 1350-ish level all the way up to over 21. And I was pretty convinced fundamentally that was it. We were where we are now when we were, down in this level. I thought, kept going. The way I trade is, again, I let the market tell me. So I do following stops, stops. And sometimes I get whipsawed out, but not usually my stop is so wide, especially after I have a good profit, that, if the market says you're wrong, David, I'm out. But this one I held all the way up and I got out at the top, and we went into September, if I remember correctly. So I held that trade from January to September. We did a couple equities because most of my followers and readers, the people that pay me, mostly do equities. I don't want to in the futures market. They just don't have the mental discipline to do it. And they don't have ice water in their veins like I earn.
Mining shares or ETFs?
Well, both.
Yeah,
I do both. I'm free market. If you would rather do ETFs, I'm pretty good at picking stocks. It's pretty easy to get in and out of. Most people understand them, but they're not as geared to the commodity as an ETF is. So there is some more risk if you take on a mining share. Okay. So I was wrong. The market came back down, as we all can see. So here we are again. I think this time it's for real, as I outlined on the gold market. But silver has got some ways to go, I think, to the downside. So let's expand this a little bit take this thing into like about a 1-year time frame and see what it looks like here. Okay, now we got a little bit better picture. We had this rally all the way up. But here's something of concern. Well, on the gold chart, we clearly saw we had big volume, but we don't have that on silver. So that's a caution right there. We had a bit of it here above normal back in September, but it didn't do much. You know, that was some big buying. I mean, that was a pretty big day, but one day doesn't make a market.
It was actually a down day.
Yeah, so we got this and back down. So doesn't look good. If you look at my cursor, I'm looking at what I consider to be about the average. So above average, it started up, above average, kept going, a little above average, and it's still coming down, and a down day there. So there's not much congestion here at the 1680 level. I think your previous guy had it at 1677. It was exactly, and by the way, he makes some really great charts. Mine aren't that great.
Oh yeah,
but that doesn't make you a better. It could make you better. I don't want to. I just want. I don't.
Many ways to skin a cat, buddy.
Exactly. So this is almost a gap here, and then we have some more congestion. So I actually think we could test this area briefly and follow this area. If we fall all the way back down in like the 15 level, let's high 15s, like some congestion here, I'm not going to give up on silver, not because I'm stubborn, because I believe what I outlined initially on the fundamental side. Okay. So we're already below the 200-day.
So there could be a buying opportunity at 16
Another
bucks.
One. We could have another buying opportunity at this level.
Okay, cool. So long term, what do you think? If silver is in a bull market, could we see it take out 50 bucks?
Yeah. Here's I'm making a new speech, Dale, and this is one of those that's been burbling up inside of me. I mean, you know me fairly well, but not, super well. So I have had these, I don't know if they're epiphanies, that may be too strong a word, but I've had these few times in my career where something's kind of been eating at me and it's rolling around in my head. And one of the ones is Missing the Silver Market. If you go to YouTube and type Missing the Silver Market by David Morgan, or maybe just Missing the Silver Market, that was one of those. That took me like 6 months, but I got it out and I spoke it one time. I didn't have to edit anything. It was just such an accumulation of what I wanted to get out. It just, once I opened my mouth, it almost said itself. I'm doing something similar. I'm speaking at the New Orleans Gold Show in a few days. And when we get to the ratio, this question has always kind of bothered me because it's one that comes up all the time. And in my view, no one's given a sufficient answer. So I keep thinking and thinking and thinking. So I finally think I've got an answer. You don't have to agree with me, but this is my answer. If you go back to ancient times, you go back into maybe I can even get it up since I've got control. I can put up another window, right? Or not. Well, anyway, I'll just speak it. So if you go back, you can see that in ancient Egypt, the gold-silver ratio is 5-to-1. 5 ounces of silver bought 1 ounce of gold. So you go back like 4,000 or 5,000 years, the ratio between gold and silver was roughly what I call the natural ratio of how it's dispersed in the Earth's surface.
Okay.
And that's for centuries and centuries, it was about 12-to-1. So my point is very simple. For thousands of years, 3000 BC, 2000 BC, 1000 BC, BC up to 2000, or not up to 2000, but up until 1873, the gold-silver ratio traded at the natural ratio because of one thing and one thing only. They both served the same exact function, which was money. Money. So to me, with over 4,000 years of history on my side, I would argue strongly that the most important function for silver is money. It's not going in your cell phone. It's not your flat screen TV. It's not your touch keyboard on your laptop. None of those things. They're all important and it's used for that. I'm not debating that. What I'm saying is the highest and best use for silver by the market, not by me, by the market, is money. Now, the further argument is that, and Mike Maloney and I are very close friends, but Mike and others in my ilk will tell you that, there's a currency disruption every 40 years. And from their criteria, they're correct. But that's not what I'm talking about. I'm talking about a currency disruption that takes place every few centuries. That's what I'm talking about. And I think that's what we're facing. We're facing a global paradigm where there's going to be a liquidity squeeze that moves down into the US dollar, and then there's a run to gold. And when the run to gold happens, there's going to be a run to silver, because when gold starts passing 2,500, 3,000, I don't know the exact number, but there is a tipping point out there that people that can only have 2,500 bucks in their bank account are not going to run down their coin dealer or find a gold site on the internet and buy 1 ounce. They're going to buy silver. And there's a lot more people in that.
Poor man's gold.
They're going to go for the silver. So
Yeah.
when it resurrects itself as money, which only takes place to this degree every few centuries, but I am forecasting this, there'll be a run into silver like we've never seen. And when that happens, you'll see the ratio go back down and maybe even 10 to 1. You might see $5,000 gold and $500 silver. And I actually believe that's possible. Now, not those numbers, but the idea. You get a 16 to 1 ratio or a 10 to 1 ratio. If we get $3,000 gold, will that happen or not remains to be determined. I fully admit that. But think about supply and demand. What is the demand on money? I would argue that the demand on money is infinite. Certainly you see it in hyperinflation. Remember, during the Weimar Republic, there was one cry and one cry only, all the way up. And the cry was this: there's not enough money. Think about that. Hyperinflation, where you take wheelbarrows to get a loaf of bread, and when the wheelbarrow with the money is out there on the sidewalk, someone dumps the money out and takes the wheelbarrow because it's more valuable. And yet the cry was, there's not enough money. No.
Yeah.
People get it backwards. So what we're going to see, in my views, my study view, is something similar. I don't think we'll ever get to that, because the bond market is a natural deflator. I mean, once interest rates are forced up by the market and the Fed loses control, bond prices come down, which is a natural deflationary force that's large, because there's so much debt out there that's held as safe, and it isn't. And so we're going to have some very, very interesting, trying times. But I do believe I'm correct. When the run to gold starts, it won't be stopped. There's nothing that the banks can do about it this time. Oh, they can outlaw it, and they can tax it, and they can put up commercials on television and tell the brain.
You're unpatriotic to own it.
Yeah. But that won't stop it. Nothing will stop it. And there'll be some people, I'm not touching gold. So-and-so told me not to. Well, there'll be a few of those.
I don't want to stop you. What a great interview.
Yeah.
Really, David, really a great interview. And you really, I learned from you today. I'm sure anyone who was here learned some things from you. And now I know where David Morgan's head is at. And I really appreciate you taking time to address our community. And David, for years, you're already my trading warrior brother.
Well, thank you. I really appreciate that. I'll just make one more quick comment for you.
Go ahead, buddy.
And that is, I will be at the New Orleans conference. I'm there only one day, which is the 4th of November. I am the last speaker on the last day. So if anybody in your community is in New Orleans or that area and they come to the New Orleans Gold Show, please come over and say hi. I'm not an arrogant, full of myself type.
You have 8x10 autographed glossy photos to
a ton of them.
David, why don't you take a minute and show your website?
Okay, I'll do that.
So people know how to follow you. You can follow. You're not that active on Twitter, are you?
A little bit. I have a fairly good Twitter following. So I do most on the equity side. This is unbelievable what this company is doing. I mean, there's only a few of us that even know about it. Once the news breaks and a large letter writer like Stansberry or Agora pick it up, then this stock will really fly. So there's an introduction to that.
You do other things besides the metals.
Yeah. Oh, yeah. And so here's a free letter. This is what I call the newsletter. So I call the Morgan Report, the report, which is, the paid side of the website. The free side, you just put in a name and an address here, email address, and you can get on our free list. And then if you're interested in subscribing, there is a pretty long sales letter. Come on, computer. Here, the video I got to redo, but you can watch it. But, I have different levels of membership, but I do the analysis, as we've done rare earth, lithium, cobalt, uranium, boom, all the metals, basically. I give a model portfolio, and I even have fund managers because I do a top tier, mid-tier, and speculations all. So like in my top tier, my fund managers only trade those because, excuse me, they are, billion-dollar companies. You can't, if you're managing money, you can't put much into a spec stock that's a micro cap.
Right.
So you get to look over my shoulder when I make a trade, whether it's in the bond market, the futures market, with gold, silver, copper, whatever. You get to see it. I put out updates and alerts. I do by video. The research is par excellence. I've got a team here. It's not just me. There's 5 people that work with me. Usually, I'm not always the first. I am on that e-waste situation. And it can be trying because you know how good it could be, but no one else knows about it. It's not going to move very far. And then every paid member gets to ask me 2 questions a month. And I usually either answer them by email, or sometimes they're such great questions, I'll make a video and put them out to the community. Had some bonus reports like everybody else. And of course, like everybody, it's only $500 a year. Most of my peers are double or triple that. Most of you are spec only guys that are really good, like geologists that really know what they're talking about, are about $1,600 a year. And then you take Marin Katusa that worked for Doug Casey. He actually worked for me first. His is 7 times as much. His report's $3,500 a year.
Who's that?
What he writes about. Marin Katusa.
Okay, I don't know.
Pretty well known in the energy field.
Okay.
He's a good guy, but it's the problem with the newsletter business is you pay 7 times as much, you're not going to get 7 times better information, believe me. Have a mastermind group. This is basically for your AIs. This is our accredited investors. Yeah. I do put out occasional financings, but not very many. Normally we get people like Dale or Mike Maloney or Eric Sprott or Rick Rule or whatever. And the advantage here is that you are on the call and you get to ask them your own questions directly. And I don't know anyone else that offers that. And then the insiders membership, I just have a couple here because basically I kind of help them coach their trade.
We're doing that right now.
Yeah. Yeah.
So there is someone else.
Yeah.
Okay. Anyway, David, if I interrupted you too frequently today, I didn't take as much lithium as I normally do. and and I had a great time talking with you. You're the type of guy I would love to go out and have a beer and break bread with sometime if you're ever in San Diego. And thank you so much for, kind of giving us a glimpse into what's ahead for us, David. Appreciate it.
My pleasure. Thank you.
All right, everyone. David Morgan. Go check out his website. Follow him on Twitter. This guy is a veteran and a dinosaur like me. You don't mind, do you, Dave?
Don't mind at all. Believe me. I just have some hair left.
Well, yeah, we'll get together, have that beer at the La Brea Tar Pits in LA. All right, buddy. Okay, that's a wrap, everyone. Good luck with the Fed today. What do you think the Fed's going to do, David?
Stand put. I don't think they're going to do anything.
They're not even going to cut rates today?
They might. I mean, that's what everyone else is betting. I'm saying they're not.
All right. And then the press conference, I usually put up Johnny Lang blues song, Lie to Me. So, David, it was great hanging out with you. Thanks, buddy.
Thanks for having me.
All right. Okay, everyone, remember, don't just count your pips, count your blessings. Good luck with the Fed. And we'll see everyone tomorrow. Adios. Good hunting.